of May. It's been a wild week. I was just wrapping up a bonus session for the Flex traders. Let's get into this session. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. I'm just getting logged in to make sure everyone's able to say hi. Hello, hello, hello. Let's get into the charts. Happy Friday, everybody.
Don't
Here we
waste
go.
hours of your life searching for great.
All right. What up, Bazinga? Got a sponsored ad. There we go. Everyone's in the house. Good morning, Don. Good morning, Gary. Katrina here. Mason here. Andrew. David. Daniel, what's happening? Steve, what's happening? Denise, back at it. Good, good, good. Donna, thank you so much. Mark, good morning. Class for what, Mark? Class for what? I have a pockets class this afternoon for VIP sessions. It's a 2:30 class that we're just going to be reviewing, and then we have a mastery class on Monday. Okay. Morning, morning, morning. Hey, Dustin, how are you? Morning, good morning. Good stuff. All right, so we're just continue what we were talking about from the flex bonus session. Non-farm numbers just came in. So we saw a bit of a mix, right? We had a miss in unemployment with a 1% increase, so 3.5 to 3.6. Non-farm numbers came in above expectations, 390 forecasted, 428. We did have a revision here. I just noticed this. Average hourly earnings. We missed for this month's print, or for this news print, but we had a positive revision from 0.4 to 0.5. So a bit of a wash on the average earnings, slight beat on the non-farm numbers, and a slight miss on unemployment. For CAD, we had a bit of a miss as well, but not nearly as bad as what happens. Like 39.5, usually it comes in like plus 100,000 or minus 50,000. So I don't know, maybe CAD economists are getting a little bit better at forecasting instead of using the random, manatee picking out a ball from a random ball pit. That's a South Park episode if anybody gets the reference. Anyway, that's how they find the plot of Family Guy. So anyway, we were talking about a couple of setups currency-wise. I like the pound CAD a lot, actually. I'm trying to get the pound CAD back up towards 62.50 or higher. The Euro CAD starting to turn, but I'm not quite ready to buy it, although it looks like it's very promising. I want to go into some pivots here. Do we have some good pivots to trade on the Euro CAD? Because if so, I might take a small trade. Monthly pivot's already been hit. Last month's pivot is available. Previous support resistance in here. Man, I don't know. I guess what I'm going to look for here on the Euro CAD is, can we just break a trend line? I was hoping we'd form some lows here in 3,000, 1.30, then start buying. I guess what we can do is this. I will be watching for this potential confirmation. We break the trend line, we pull back, and we buy it, and we look for this to swing back up to past support. We try to take it back up into this high, this yearly pivot sitting around 1.47. Or, maybe it stays on the left-hand side of the trend line, and we still get some more downside until I hit my levels at 1.30, where I can buy the heck out of it. So I'll stay patient on Euro CAD, but I am long on the pound CAD. I'm also long on the pound Swiss, which is at 21.64. We had a bit of we had a crazy noisy week, right? FOMC came out swinging. Thursday was a complete reversal in full. I was saying earlier it was one of the largest single day changes from Wednesday's close to Thursday's close. One of the single biggest changes in like almost 30 years. So I think it's 1985 we've seen that. And then I pulled up a little image that I want to talk about where you take the worst seven, the top seven in the last near century of the S&P 500. You take the worst ranked in order from like worst performing 86 days of trading. And again, I'm just reviewing this from the Flex bonus session, but you take the 7 worst starts of every year. Okay. So from 30% in the hole to 10.4% in the hole, anything that's double digits. And I want you to notice that the market has historically made a pretty valiant effort to recover. Now, it doesn't guarantee that we finish positive on the year, but it does mean that once we put in some levels, the market does find a way to rally. And this also goes in line with, it was interesting to have a rough quarter, right? Q1 was pretty bad, one of the worst quarters in I don't know how long. And April continued, all right? And so May is traditionally a pretty bullish month. And it's not done. We're at literally the first week of May. So if we can survive this week with just a little noise on the Fed, there might be still a little recovery coming. And if that's the case, it just kind of plays along with this. It doesn't mean that the market's going to finish positive for the year, right? This is what we're still questioning. What happens this year? We don't know. There's no crystal ball, right? But with this attempt, down 30%, rallies back 22%. It's still negative for the year, but at least it's not as bad. Down 14.7, rallies 11.2, still slightly in the hole. Negative 14.6, rally 17.2, finishes break even. Okay, over here, down 11, 31% rally. That was 2020, which, we know what happened in 2020. Bazooka, printing money, right? So we knew that. 10.4, 1942, 25% rally, finished positive. So it's just, again, pulling some history. I think it's interesting to check this out and see if the market's going to try to make a rally. And the reason I say this is because our bearish sentiment is as bad as it's ever been. In fact, I'll have to find, let me find it. I want to find, I know I have a picture of it here from my buddy. Let me find, I sent him a picture. I got this report from Northwestern Mutual. I took a screenshot of it. Let me find it. Yeah, we talk way too often. So I have to go through the archives. But I'm trying to find got all these FOMC things. It doesn't matter. It was basically showing that one of the readings for bearish sentiment, and as bearish as overall reports are, hasn't been this way since like the bottom of 2009. So when the market actually bottomed in the SPY and the S&P 500 in 2009, that's when this reading was as high as it is right now. So again, I'm not saying that we have to have a low. I'm just saying that it's possible based on the readings that we can get one. Okay, so here's the low back in 2009, right here. So right around this is as bearish as the markets were, as bearish as investors were, and that was right around the point where we actually showed that bottom. Okay, so I mean, do I think we're going to have a decade plus of growth again? No, I do not. Okay, but I do think that in this current environment, we can at least hold. You see my little channels here. I've got a lot of noisy stuff going on, but if you can, focus through the weeds, I think that we have this type of structure here. Let me draw some straight lines. So high to low, lower high to lower low. If we're going to have some channel support and structure, we could come back up and find resistance. And again, it could still make a lower high, right? We could still have a rally in the short term, make a lower high. This could still flush back down and find that 20% correction. This could flush back down and find the 30% correction. I could have swore that I did that earlier and it was 40%, but it's 30. So if I did from this high to this low, yeah, this is right around 30%. So the SPY pre-COVID high is 30%. So that's a 30% correction right there. And if we come all the way back down to COVID lows, which would be like the bubble has burst and look out below, nothing is safe, it's going to be interesting. If we came back down to the COVID levels, that's a 50+% correction, which is as bad as it's ever been, right? I mean, our 2008, 2009 dip was 56%. Any type of major recession crisis we've had has been like 50+%. So that would be proving that everything that was just done from 2020 to now is worthless and pointless. And I think I don't know. I feel like that would be enough grounds to like completely question the integrity of the Fed and what they've been doing, because this is all baloney, And we kind of know that, but it hasn't been officially claimed and staked. Like, Powell still talks and the market still listens. And what the markets have been doing, by the way, is highly correlated to what the Fed is doing, not what earnings are showing. Right now, we have like some of the best earnings reports that companies have had for years, and yet it doesn't matter. The low tide sinks all ships type thing, and there's not really a lot of places you can be right now that look good, other than forex, other than holding crypto and hoping it's a hedge, other than being long volatility. So we will find out. And like I said yesterday, I mean, traders this week with equities on demand and flex, we've had a lot of important conversations on this is a year to survive. It's about survival. I think if we can survive whatever this market's throwing at us from the first 4 months of trading this year, survive May, get through summer, we have a midterm elections. We have a lot of stuff ahead that's still going to shake things up. I think the market is still wondering, what it can do to kind of salvage some type of break-even year, salvage some type of gains. But at the same time, maybe it truly is like complete deleveraging, complete cleansing and you have to start from scratch. You know, those that have been running for the last decade that have been the strongest performers maybe are not anymore. You know, maybe, and I keep saying this, but if you go to Apple, I'm telling you, if Apple breaks below 150, look out, right? I mean, it's Wall Street's going to open here in 17 minutes. Pre-market's 156 on Apple. If we break below 150, I'm telling you, like, this makes me really concerned because this has been, for the most part, I mean, Apple has not made a new low yet, and the S&P has. So if this breaks 150, this is still a rising wedge, and we could come all the way back down here on Apple. And I think if this happens, you're going to see a major house of cards play out in the markets as well. This could be the capitulation move that everyone's like, I think it's happening. It's not happening yet. If Apple drops from 150, I think we drop quickly to 110, 105, 100. And believe me, I'll buy Apple the whole way down. Okay, this is one company that I will buy, but it's going to drag everything with it because it is so over concentrated in everybody's portfolio. Every 401k, every pension plan, every firm has a ton of Apple. You know, this market cap is what? Market cap is $2.6 trillion. You know, we knew that. I mean, when we had earnings last week and it was like 50% of the NASDAQ and 30% or 33% of the SPY or S&P 500 were reporting earnings. That was a big week, right? So, I mean, massive company. That's all I'm saying. So if we break 150 and we hold below 150, look out because there's still some levels in here that I think Apple falls and it drags everything with it. But again, even if it's falling here, I still look at this as an opportunity to buy. You know, I mean, I would be happy to own more Apple at $100. Give it a year or two or five. Do I think Apple is going to sit at $100 for the next 5 years? No. I think that we find a way to stabilize. We might have some range trading here for a while. But if we go from 100 to 180 for multiple years, well, a trader can make some money there, can't they? Right? We can accumulate more every time we get a dip. So anyway, there's ways to trade it. That's all I'm saying. Ways to trade, ways to survive. I saw that Bitcoin cracked around 37,000. So we're trading at 35,886. This is a bit of a concern for those maximalists. We're breaking down here, which I said is a potential threat. I think this also is a potential bull trap, or I'm sorry, bear trap in this case. Look, 35,000, 30,000. I'm still watching those numbers. At this point, draw a trend line and wait for this. Okay, I don't think there's any reason to jump in and force buy trades right now. I'll still take some bites at the numbers. My transaction level is 35K and 30K, but I'm looking for price to get on the right-hand side of this trend line before I start getting heavier into the positions. So if we get on the right-hand side of this trend line, let's at least let this form a low. Okay, yeah, we did non-farm. We talked about that first thing actually. Look at the numbers. So it's kind of a wash, right? We had a beat on jobs, but a miss on earnings, miss on unemployment rate. Currency strength wise, not much has changed. Like the dollar jumped up here the last few minutes. The euro's been pretty firm this morning. Aussie's dropping hard. New Zealand's dropping hard. It looks like we have some news and rumors rumbling in the ECB that by like July or October, the ECB is going to be up to like 50 to 75 basis points in the rate hike. So the euro is now going to start seeing some interesting flows if they're going to officially come off zero. You know, this is what, and the Fed just did the same thing. You know, the Fed since 2020's emergency cuts in April, I mean, we just started raising rates in March of 2022. So the ECB has been kind of permanently zero for the last decade, thanks to Mario Draghi and his kitchen sink approach. But now, you know, just like everything else, inflation is sticky. Central banks are having to normalize. They're starting to tighten. And even the ECB is having to. So we can see like a lot of flows from dollar, which has been, you know, really strong 6-7 weeks. We can start seeing that flow in to start pricing in these ECB rate hikes over the next 3 to 6 months. But non-farm is, you know, it's we're just looking at it today. I think the noise is kind of settled in from Wednesday to Thursday. So I was looking to see what the jobs were. DXY, this is what I'm watching. We'll come back to Bitcoin in a second. So DXY, we have three. This is DXY. We have 3 monthly targets here. Okay, so 3 monthly pivots in a row, and that's usually not the case. Let me make sure this is a third one that's in fact not hit. Maybe we only have 2 in a row. Oh yeah, we have 3. We have 3. So DXY, we have 3 in a row, and my bar count from this hit here, we're sitting around 175 bars on a daily. That's a decent bar count. It's not 200 plus, but it's close. And monthly pivot, monthly pivot, monthly pivot. I am certainly looking for highs to form. We form a high, we fall back down into this trend line support, we possibly even break this area. This is also multi-year resistance on the DXY. If I zoom out, you can see it on the weekly time frame right here. Okay, so is this enough to hold? Back here to the highs in 2016, back here to the highs in 2020. If that area holds, sure. We hold an area, we hold resistance. Do we come back in just for a little correction? Or do we actually put in a top, come back down to the midpoint, come back down all the way to where we started? I'm not sure yet. This is what we'll be doing. I think halfway is a great spot for equilibrium. All the way down is just a beautiful range trade. Sell the high, buy the low. Trade, right? Okay, Bitcoin. Let's go Bitcoin, Ethereum really quickly. So I believe there was like a loss of about 6 or 7% in market cap in total crypto this week because of this fall. I mean, this is the weekly time frame. Take a look at our candles. The weekly time frame. So we have 1, 2, 3, 4, 5, 6 weeks in a row bearish on Bitcoin. Ethereum. 1, 2, 3, 4, 5 weeks in a row bearish on Ethereum. Levels to watch. We're trading at 2691, watching 2500, watching 2000, and watching these equal lows here back in early or mid 2021 around 1750. So just watching the big levels. Okay, watching a lot of big levels. And yeah, like I said, it doesn't feel like there's a lot of great spots to be right now. I'll be real honest. I mean, Wall Street's going to open here in 10 minutes. I don't know of a lot of spots I can be putting money that feels great. One thing that's been doing really well is we're in energy, we're in materials, we're in inflation-friendly assets that are benefiting from this sticky inflation stuff, benefiting from supply chain bottlenecks. But if we have peak inflation and we have peak supply chain bottlenecks, guess what happens to those stocks that have been performing really well and those companies that are benefiting from this cluster F? They start to revert, right? There's reversion to the mean. They start to balance a little bit. And we're starting to notice that too. So taking a look at a couple of stocks we have this week. I did roll my SLB out, and I rolled at 39.50 out to next week. I will probably roll that again if we're trading up to 42. I also have a $41 call that I might be losing this week. Let me confirm that here. I'm a little bummed that I didn't keep it at 46, but we just didn't have any premium at that high. I kind of repaired it a little bit early, but it's fine. Let me see what my covered call is for SLB this week. So I have a rolled call out to May 20th for $41. So I could still lose the stock at 41 and possibly even roll it if this thing continues to rally. So that's fine. Do we have a rally on Johnson & Johnson above 182? Nope. This one, fudge, man. I'm going to have to try to keep preparing this one. I'm trying to lose this at 182. That would give me $30 a share. But I might have to, I don't know. I might have to settle for something less. I could also just hang on to it. It's not a big position. ARK. Let's take a look at tech sector. ARK's at 47.51. Now we do have, we're really close to having some oversold conditions on ARK, and along with a bunch of other tech stocks. I mean, what did I get in this week? ARK is here. I think we talked about, I know that I took a trade on DraftKings, DKNG. DraftKings is at 14.92 pre-market. They had earnings this morning, so hopefully that's a beat. We have a 15 by 14 credit spread. So if we have price rallying up above 15 today, great. We'll keep our credit here. Otherwise, if it flushes down, I do have the expiration out to the 13th. So when I shared this for my top weekly pick for my Pulver report, it was a 5.6 expiration or a 5.13. Depends on if you want to give yourself another week to manage the trade. But still collected 25 or 26 cents in the trade. So we'll see what price does. Today, if it's above $15 and you have the 5.6 expiration, you'll keep your credit. No big deal. I have one out to the 13th. So I have next week to manage this trade, and price goes down, I'll manage that long put, and I'll take some ownership of DraftKings. If interested, I do have a good article to share just to take a look at some top sector picks. This is from Morgan Stanley. I'm evaluating these stocks, so if you want to take a look at it, here you go. This is Morgan Stanley top 45 picks by sector. So again, do your due diligence. You can read on it, but it's a good article. Have a look, little explanation, which always helps. All right, let's see, anything else? We got some expiration. So a couple other stocks I want to take a look at. Then we'll get into currencies again. J&J, we just looked at. Uber. I was assigned Uber this morning, and I need to see if that long put is still open. Because if it is, I'm assuming that they assigned me at like 37, and I still have a $36 long put that I'm going to have to close out for profit. So let me get logged in here. It's 9:23. I've got 7 minutes for the open. I'm going to look and see if I can get a 10. I closed out Uber earlier this week for a $10 long put, and I'm going to try to do it again. I thought I'd get maybe a little bit more for it, but it's okay. All right, so let me get my little code here. Okay, so I'm going to take a look at Uber. Looks like it was assigned overnight once everything loads back up. And I think that was the only notice that I had overnight. So a couple of other good trades. I know some traders took this one. I did not. I wish I did. We had a $68 put and a 68 by 69 bear call spread on Micron. This is another semiconductor play. That was a great trade to grab an extra $1.05 this week. All right, so let me take a look at Uber. If I still have that long put running, let me see what I can close it for today. And Facebook, did that roll actually fill? I don't know if it did or not. So Facebook looks like I'm going to lose. If I can't roll it, I'm going to lose it. I'll take a look at that one as well in class at 10 o'clock. International Paper, covered call at 48. This might be a stock that I lose and get some margin back on. IP is trading at 48.11. If it stays above $48, I'll lose it. Make a few bucks a share. I'll be happy to get that one back in some cash. Netflix, we're flying out to the 20th. Old National Bank, we got some monthly expirations. Pulte, this is a home builder. Toll Brothers, Pulte, KB Homes. Actually been pretty resilient. We collected like $1.70 or something like that, or $2 on this credit spread, and it's sitting right in the middle between like $42 and $43. So we're gonna manage that one the next couple of weeks. But let me see Uber, Uber right here. So the $36 put is still running. That's my long put, and it's up. So let me see what I can get for this here. I believe I have it already pending, so I have to change the pending order. Uber is here. So I got filled on the shares. There's my VIXM profit. Uber for 15 that I'm probably not going to get today. Change. Let me see if I can get 10 bucks for this. And the reality is this. I mean, if I don't get $10 on the long put, well, I'm gonna have to get something, right? They've already assigned me the additional shares, so I've got to get something out of this long put, or else it's gonna be a pain in the butt. So, they assigned me at 37. I want to capture something out of this long put. I'm gonna watch this morning when we're officially open here in 3 minutes. Pre-market's 26.56. So what I should be able to get this if I have a $36 long put minus 26.56. I should be able to get 944 out of this. Recent lows at 26.30, another 20 cents. I mean, I should be able to get 950 out of that. I'm a little mad that I'm settling, but you know I don't want to get nothing for it. So let me try to get 9. See if I get 950 this morning, and I'll monitor that. So on my spreadsheet, go to my break even and update that to 950 if I can get it. I was not planning on taking more shares of Uber, but since they assigned me, it looks like I'm going to have to. So this will be for $9.50 pending, and it looks like they assigned me at 37. So the 6th, another 100 shares, $37 open. So that gives me 200 shares of Uber with a break even at 28.62. So 28.62, I'm only upside down a couple bucks. You know, any recovery in the broader tech market, any recovery in Uber, I should have no problem repairing this trade. I'm not looking to hold this one. I think that if Uber gets back to $30 plus, you know, trying to turn this for a couple dollars profit and get my margin back. All right, so that'll be something I have to manage today. Long put, good managing that. Airbnb, this is another one I'm going to add a new covered call to. We're trading at 143. My ownership price is 140. DOCN, $35. Just going to sit on this for a little bit longer. QuantumScape, trading at 1503. International paper we could lose today. Okay. All right, did some rolls. All right, that's it from the stock side. We'll cover that at 10 o'clock in Equities on Demand. By the way, if anybody, I mean, a lot of you that are in the room that are watching, real quick, if you'd hit that thumbs up button for me, I'd appreciate it. Secondly, if you're interested in trading, you know, Forex with me, stocks and options with me, I mean, I don't plug this stuff because I don't want to. I just want to come here and talk and have some fun. But on my website, pulverreport.com, I can get you a $27 trial to any of my trading rooms. So you come to the pulverreport.com, go into systems, go into trading rooms, and this is a link for a $27 month where you can trade Forex with me, trade stocks and options with me. Because I think a la carte, they're like $199 a month. So for 27 bucks, trade with me for a month, have some fun, let's make some money. Okay, so if anybody is not in one of these trading rooms and you're interested, that's a good way to start. Cool beans? Okay. Anything else you'd like me to cover today? I've got class at the top of the hour. We've got a Pockets Pattern Pro class this afternoon for VIP, a little Zoom session to answer some questions. I'm going to monitor some positions there as well. We're going to take a look. So it's officially Wall Street open, and we were pre-market down. Futures was pointing to the downside, so we gapped lower. We're going to see what the market's made of today, right? What's going to be interesting is where do we finish today? By the way, is anyone watching the Euro Swiss? Because I am. Euro Swiss is at 104.46. Nothing like waiting forever for this thing to finally move. Speaking of, is this all Swiss related or is this Euro? Yeah, it's all Euro, man. Euro is freaking ripping this morning, which is great. Go forever, Euro Swiss. Never look back. 106.50 would be freaking sweet. I'm gonna have a nice little payday at 106.50, and I think I might deserve a week off after that. All right, so yeah, 106.50 would be awesome. That's my minimum target. We projected a little head and shoulders, or a cup and handle pattern rather, that gets up to 108. We also have a monthly harmonic pattern that merges there at 108 with a 618 retracement. So a lot of good things happening between 106.50 and 108 on the Euro Swiss. Loving this ECB stuff. You know, talk it up. Hopefully Christine Lagarde has a coma for the next 6 months, and the ECB's like, yep, we're gonna raise rates. We're gonna raise rates. It's gonna be 75 basis points by July. Don't say anything to disrupt it. Okay, Gary, keep holding the Euro Swiss. I am, dude. I am holding it. I'm holding it. I'm holding it. My steadfastness on the Euro Swiss has been unwavering, and I'm not saying it's been fun, but for traders that have been with me on this journey, it should pay us pretty well. So up here towards these alarm clusters that I have, I just did the math. If I hold this thing to 106.50, it's about $132,000 of profit. So it is certainly worth my time to watch this, monitor this, and make sure I can close things up in time. We talked about this morning as a potential cup and handle, which would be this. You take this movement and you project that symmetry to the upside, and that gets us up towards 108. So we have a couple things. We could have a wave cycle. We could have a 618 extension up towards 106 and change. There's a lot of ways this thing can play out. You know, off the backside of the trend line, you look at this on the 30-year history, 25-year history, it's at some of the lowest lows we've ever had. You know, and we're talking like straight up intervention type lows. So even a month, right? Even a month of consolidation could get us back, or I say a month or two of correction could get us back into levels where, you know, 1.00 parity, huge reaction through parity, huge reaction in 2015, coming down to these levels now, building off these lows, even if it's a correction. Okay, but come on, man, give us something good. So yes, Gary, I'm holding the Euro Swiss, and hopefully this thing does not disappoint. All right, Uber back to lows. Hang on a second. And it filled at 950. course it did. When I probably could have been filled at 10 bucks. Darn it all. So Airbnb back to the lows, Uber back to the lows. Let's see. Uber is at $25.96. Well, there's my $10 value right there. You turd. I should have just left it at 10. Dang it. All right, whatever. I mean, I'm in, so now I own it, and my break even is around 28 bucks. So the good thing is once this covered call expires, I can come around and repair this one and try to get like a $28 to $29 covered call for next week, and maybe take care of it with a repair. So I'm gonna have to let this one expire. I don't have to, but I certainly don't need to tie up the margin to just do it all over again. But my $33 call expires. I can throw in another covered call for the 200 shares I have, and that break even is $28 and change, $28.62. So if I do a $29 or $30 covered call, I can repair this. Let's say I do 30 bucks. I do a $30 covered call, I can get $1.38 per share, and now I have 200 shares. So better than losing. I can repair the trade. Okay. Are you going to get back in on the dollar Swiss? If we have a pullback, yes, but I'm done with that trade now. So we're trading at 98.75. A pullback on dollar Swiss would be great. And for this reason, I would love to see a pullback on dollar Swiss for number one, dollar index dropping, right? And where would I like a pullback to? Past resistance becomes support. Okay. Possibly even if we take this swing from low to high and you have a pullback in here, look for a pullback that can then run its way up to parity at 1.00 or possibly up to this swing high at 102. One thing I'm not going to do is keep buying this thing at the highs. Remember, we were long and we were scalping, long, holding a position. When this thing started to break, we took profit here at 96.50, and I took profit yesterday at 98.50. So this has been a fantastic trade for me that I don't have to sit here and regret and say like, oh, I should have done more on the dollar Swiss. I should have held more positions, but I literally had like 30 positions running on dollar Swiss that I took a huge profit chunk on. I'm trying to do the same thing on Euro Swiss right now. So if I did something on dollar Swiss, it would be I want to pull back first and then a rally can come, or a pullback to channel lows, buy the channel lows. I mean, I don't know if we get it, right? This past resistance, that'd be great to see it drop back down to there. But I don't know if that's dollar related or if the Swiss just keeps running. Think about it right now. Like the Swiss might be in the best position to be the weakest currency pair of all the majors. You have the negative interest rate of negative 0.75, right? And you have these flows of a currency that has been super, super strong for the last several years. I'm getting chart alarms going all over the place. Darn it. That thing's up about 100 pips. So I just think that we have some promising flows coming on Swiss crosses. I mean, and maybe the toughest one is going to be Swiss yen to the downside. But pound Swiss, I like going back to channel highs. I'm long in this one. Dollar Swiss, we took a huge chunk of profit on between 96.50 and 9700 or beyond. Euro Swiss has been a long time coming. Now we're 20 to 30 pips clear of that break at 104. I hope it holds here. It's looking good. Let's get to 106 plus. Let's freaking celebrate that Euro Swiss for once if it keeps running for us. And hopefully the entire Swiss basket starts to be a nice trade for us. And maybe it's a nice little shift. SVXY. Ooh, this might be another one that I just buy. SVXY down to some fresh lows. I own this at 51.22. I am probably going to look at some bull put spreads on this. I'm going to talk about this in class today. SVXY. The spreads might be a little bit wider. I might just buy more shares. But if the XVXY is dropping, that means that we should have the VIX going higher. VIX is pushing up today. That means my VIXM is pushing up today. I've got chart alarm set. I might be taking some profit. I want to let this run. Like long volatility is like the one thing that I still want to have as a hedge, right? If stocks are going to drop, I'm still long volatility. And that's okay. VIXY is the same thing. Still long VIXY. Break even is 26.02. I didn't get the levels I wanted. I tried to buy this thing at 11 bucks and never came down to those levels. So anyway, but if you did this back in April, worked out nicely. If you're owning the shares here in the teens, you're doing great. And hopefully there's more upside here with higher volatility. One thing that we may not have yet, and this is a bit of a concern, is we might not have what feels like a capitulation low. Okay? Yes, the market is sold off, but we've seen like this kind of rescue from the Monday, Tuesday, Wednesday with the Fed having that big pop here from the start of the week. Monday had this crazy reversal in the afternoon. Wednesday peaked. Thursday faded, one of the biggest reversals in the last 30 years. And now we're pushing back down to retest these lows. So it doesn't feel like capitulation yet. We're still like back and forth and very volatile, but the 385 level on SPY is 20%. The 340 level, okay, the 340 level is 30%, and that's the pre-COVID highs. So you want capitulation, that's what it could be, right? You want capitulation. Let me see if I have a screenshot of this. Take a look at this image. 1920s bubble, 1990s bubble today. One thing you notice here is look at where, the structure was. Look at where the structure was. You see how when these bubbles burst, it gives no fudges about these levels. Like we have full on falling, full on capitulation, and it goes as fast and as violent as it wants to. Now, are we in an environment where it's a straight up bubble? I don't know. I don't think so. I think that growth was in a bubble. I think tech was in a bubble. I think it's overvalued, and we have clearly like a reckoning in tech. But until Apple's breaking 150 and dropping to $100, I don't think there's a bubble necessarily. You know, so it's going to be really interesting to see how this all plays out. It could be super difficult. It could be super easy. So far, it's been difficult, right? Right now, the last week especially feels like there's not a lot of places I can be to see green other than Forex. You trade the right currency pairs, you follow the right flows, Forex is great. But in stocks, I mean, unless you're a seller, unless you are long volatility, unless you're selling futures, I mean, you've got to be bearish right now to be making good money. And that's what's interesting about reading some of these big, like I saw that Bill Ackman, Pershing Square, up 10% for the month of April. Well, he hasn't done squat in like 12 months, right? Like that fund has done nothing, 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 nothing. I feel like going into 2022, a lot of these big funds that are right have been hedged, have been bearish on the market, and they're starting to get paid to do that. That's about the only way they're positive. But also, he took a huge haircut on Netflix by having no hedging, where he took a $400 million loss in Netflix. So anyway, I just thought this was interesting, right? Bubbles don't care about structure. They fall and they fall violently. And a lot of times when they do it, we see these massive, 50% corrections. That's what 2020 could be. 2020, from the low of COVID, if we give back 40 to 50% of that move, that just shows like, man, the Fed really fudged up. It's all fake. It's all funny money. It's all fake growth. Because we come back here, that's the reality that the market's going to have to figure out. Is this where we belong? And if we do, what happens from there? Is this enough to stabilize and base and we see who survives? Because there will probably be companies that do well and maybe justify a gain. There might be companies that do poorly and the whole stock market gets worse. We talked about this week a lot. The K-shaped recovery. Companies that do well versus companies that don't do well. There's going to be a reckoning in here where there's going to be a cleansing. Companies will not survive this. There will be bankruptcies. There will be mergers. There will be buyouts. There will be all sorts of crazy stuff happening. So things are definitely going to be changing and shaking up this year. I know in my portfolio, I might lose stocks because they're bankrupt. SPAC plays that are pennies on the dollar maybe for buyout targets. I don't know. It could be really ugly. Uber, son of a gun. Just freaking wait. So 2509, I could have grabbed that. That would have been my $10 or $11 long put right there. Whatever, it's fine. I'll just wait. Okay. Big Les asking, how do you handle the fees on holding? Part of the game, man. I mean, look, I'm about to make $132,000 again, provided my Euro Swiss gets to my profit target. Of the $132,000 profit that I will have, if it hits my 106.50 price target, I've probably paid thousands of dollars in rollover. Okay. But if my net profit overall is still 120 grand, $125,000, even $100,000, it's still worth it. So and again, we've talked about this with potential carry trades. Does it change over the next 6 to 12 months? If central banks start coming off of zero and start to normalize their interest rates where we have every central bank at 1%, 1.5%, 2+%, this old carry trade might come back and actually change the landscape of being a Forex broker. For us, like we might actually get paid to hold some positions. Maybe. But I mean, I think everyone gets caught up in like fees. Like, yeah, it's annoying. But I'm telling you, I watch this stuff every single week. I make one little trade, grab a few bucks here and there. My fees are taken care of for the entire week. I'm holding 70 plus positions right now in Forex. I make one little trade, one little scalp. I pay for all those fees in a week. So, I mean, I've got to maintain, but when I have big positions like this, the payout is way more important to me than my daily financing fees. So it just happens. But again, I know some traders hate it. They just feel like I'm losing money. It's like, fine. But I'd rather sit on a trade and not have to lose a single penny for 6 months and then make a huge chunk of profit when it goes to my profit target. But that's my style, you know. So anyway, all right, everybody, I'm gonna wrap it up here. We got a few more minutes. Class at 10 o'clock for Equities on Demand. If you want to trade some stocks and options, again, check out the website pulverport.com. There's a trading room trial if you're interested. You can come trade some stocks and options with me. So far, we're doing great. We had a great Q1. It's been a rough couple of weeks to see I'm not getting stocks called away right now. I've probably rolled too many covered calls. I could have taken smaller profits and got rid of stocks and had some more free capital, but I didn't. I want to collect some more premium, lower my cost basis. I think this is one thing it's really important if you understand how to trade stocks and options. If this is where the stock goes eventually, and the whole time I'm watching the stock drop, I'm lowering my cost basis. What this helps me do is when I'm going to get rid of the stock at some point, I increase my profit potential, right? So if I'm lowering my cost basis with several different option strategies and the stock ultimately goes up to revisit highs, repair the trade, get the new highs, you make a lot more money that way. So that's what works. And so right now I'm in like a holding pattern. I'm holding a lot of stocks. I'm lowering my cost basis and trying to keep my break even as close to the current price as possible. But the one thing I'm doing right now is I'm long volatility, and that seems to be paying pretty well. So the SVXY, I'll be watching this one for maybe a little buy. We're trading at 45.88. I'm going to look at a credit spread in this one because if we can get filled on it and it goes deeper against us, then I'll just cash it in for a long put, own this thing dirt cheap, and then any recovery in the S&P, this thing will bounce back up and bounce back up in a hard way. And meanwhile, I'll stay long on volatility and try to see where this one wants to go. So VIXM, if we break these highs today, it's going to be tempting. I own this thing at $27.95. If I can turn this for a $10 per share move, it's going to be hard not to take it. It's going to be really hard not to take it, just as a hedge. But could it go higher? Maybe. Could we have like volatility really scream up here towards 42 and I make $15 a share? Yeah, that'd be awesome for 1,000 shares. Nice little hedge, right? So anyway, all right, everybody, I'll let you go. Thanks for being with me today. We'll be back next week, same time, same place, youtube.com/Chris Pulver, Monday and Friday at 9 o'clock. Let's have a great Friday, great weekend. Everyone, Equities on Demand, see you at the top of the hour. If anyone's in my VIP session for Pockets Pattern Pro, I'll see you this afternoon at 2:30. And that's it. We'll manage for the rest of the day. I can't wait for it to be 4 o'clock. Can't wait to be 5 o'clock. Can't wait to crack into the weekend. And I got some golf lined up for tomorrow. So get me out of this desk, man. It's been a long week. Okay, see you soon, everybody. Bye.